For Creamer Media, I'm Lumkile Nkomfe. Joining me is Jupiter Mines CEO Brad Rogers, here to discuss the latest developments taking place at the company's Tshipi Borwa mine in the Kalahari manganese field. Mr. Rogers, my first question is with regards to Jupiter Mines. What is Jupiter Mines' view on the future demand for manganese, particularly in the context of the global energy transition?
Manganese, in terms of volume, mostly goes into the making of steel today, and that will continue to be the dominant use of manganese looking forward. Within that area of demand, China is dominant and has been dominant, and China is going through a period of time where their demand for all steel making materials is plateauing and probably slightly reducing over time. India and other Southeast Asian countries in particular are rapidly increasing their demand, but they're coming from a long way behind. So what you see in terms of demand for steel for the moment is relatively flat for the coming years. But I think looking out further, there's going to be an increase in the need for steel in India, in Southeast Asian countries, and also in Africa as countries that are less steel intensive start to industrialize. So that's the steel side. On top of that, manganese goes into the making of many other materials, and one of those that gets talked about the most is electric vehicle batteries. That's quite a small area of demand right now, but that is going to see much more rapid growth in demand than we will see with steel. In addition to that, there are many other fractional uses of manganese, but those are the, I think, two most important that we're focused on and that most manganese producers are focused on, one or other or both of steel and electric vehicle batteries. So steady growth for steel. You can't make steel without the use of manganese, and much more rapid growth from a very small spot starting from electric vehicle batteries.
What is Jupiter Mines' outlook for its financial performance in the coming years, and how will this impact its investments in the Northern Cape region? And also how the revenue that's being generated from the Tshipi Borwa mine be managed to ensure its optimal use for the benefit of local communities?
So right now, Jupiter is invested in Tshipi. We own 49.9% of that mine. Jupiter Mines has been listed since 2018. Because Tshipi is a important, well-run, and very good manganese resource, it's produced good profits for its shareholders, including Jupiter, and that's enabled Jupiter in the last 7 years to pay dividends to Jupiter's shareholders off the back of Tshipi's profits that are in excess of our market capitalization today, even though Tshipi has more than 100 years of mine life remaining. So it's a very valuable mine. It's been a very good investment for Jupiter. Jupiter's profits and Tshipi's profits as a source of Jupiter's profits go up and down based on the manganese price. But because Tshipi is efficient from a cost production perspective, it's profitable through the manganese price cycle. So it's natural when manganese prices are a little lower than average, as they are today, then our profits will commensurately be lower, but it's still a profit-making enterprise even at lower manganese prices. And so as we look out over the coming years, we think that we're in a balanced market at the moment, but we are also seeing signs of stimulus in China, and so that may support higher manganese prices, and if it does, it will support even better profits for Tshipi and for Jupiter than we've seen in the last few years. In terms of how we are focused on local communities in and around the Tshipi mine in the Northern Cape, that's been a very central focus for Jupiter and for our co-investors and for Tshipi management at the mine. There's a proud track record of empowerment at Tshipi and of being quite innovative in terms of supporting initiatives in the local community. And these things are reported in Jupiter's sustainability report. So that's a central part of Jupiter's strategy. It's always been a hallmark of Tshipi and something that all of the stakeholders, including Jupiter, are quite proud of.
Can you share some of the steps that are being taken to ensure the resilience of supply chains linked to the Tshipi Borwa mine amid potential disruptions?
Yeah, I mean, so if you think about the key inputs to production at Tshipi or any mine in the Kalahari manganese field, power is one of them, rail is a big one, and then the supply of labour. So from a power perspective, you would be aware that Eskom power supply has been more reliable in the last year than it has been in the preceding few years, and that's a welcome development. We obviously do need power to run the mine, but Tshipi was built off the grid, and so we're self-reliant on our own diesel-fired generator if we need to be, and we're also connected to the Eskom grid. So we have inbuilt mitigation to power supply risk there. We are incidentally looking at putting in solar and batteries at the mine, and that's not about mitigating that risk, but rather driving improvements around cost and ESG, carbon footprint, those sorts of things. So that's power. From a rail perspective, we don't have enough rail capacity. We don't have as much as we would like. That's a common refrain in South Africa, as you'd know. As a result of that, we are road hauling material, and because Tshipi enjoys a good resource and a good operating cost base, we're able to road haul profitably, although rail hauling is obviously more profitable and more cost efficient. We have a number of paths to market, and so to the extent that there is an issue with a particular port, Tshipi takes a relatively material amount of its production out through the port of Lüderitz in Namibia. And so part of the management of various road and rail channels there is to mitigate the risks of production should one of those channels have an issue. And then the supply of labour, employees, contractors, etc., is an ongoing effort in at Tshipi, as it would be with any mine, to ensure that people are retained, are happy, and that also from a community perspective, we're doing what we can, and we're demonstrating that we're doing what we can to foster and support local businesses. And so that's been a very successful track record at Tshipi. We've never had a major disruption to production because of any supply chain issue, but it is something that you need to remain focused on and keep challenging yourself on. But those are the key areas that we're focused on and managing it in those ways at Tshipi.
Finally, what operational and strategic outcomes do you hope will come out of Jupiter Mines' new partnership with Exxaro Resources following the latter's recent acquisition of manganese assets?
We see a shared strategy and vision with Exxaro. They obviously have seen the same things that we have seen and that others see, looking out that manganese has a robust demand future. And then on the supply side, a number of important manganese mines in the world that have been around for the last 50 years or so are coming to end of mine life in the next 10 or so years. And that will drive market share growth opportunity to African mines in particular, and in particular open cast long life African mines like Tshipi, to take up more of the share of demand. But the most efficient way to be able to program for that opportunity is through consolidated control structures. That is underpinning Jupiter's strategy. Exxaro obviously has the same view. And so we're looking forward to strategically working with Exxaro, given that shared vision, to see how we can generate more value together. Operationally, Exxaro obviously is an experienced miner, and so no doubt they will have ideas that can be brought to bear for the benefit of Tshipi and for all of the shareholders, including Jupiter. Under the current joint venture control structure, those things are put into the pot as ideas, and we will be working on them together, and that requires agreement before implementation at the mine. And so, I think they'll have good ideas, which we welcome, and providing they're valuable for the mine and for Jupiter, then we'll obviously be very, very supportive. Beyond that, we see a great opportunity to collaborate for the longer term strategic vision. And we really support this development of Exxaro joining the shareholding structure for both of those reasons.
That was Jupiter Mines CEO Brad Rogers.